Hey everybody, welcome back to Grain Markets and Other Stuff. It is a special evening edition tonight. I've got Jordan Fife with me. Jordan is an ethanol trader. Jordan, how are
Yes,
you?
sir. Well, how are you doing, Joe? Thanks for having me.
I'm good. Thank you for spending some time with us tonight. This ethanol thing has been very interesting this year, and I figured it would be cool to bring somebody like yourself on and talk to us about ethanol a little bit. We know that we lost. You got to keep in mind that a big chunk of the people listening here are farmers, people involved in that sort of thing, and we lost a ton of demand for corn because of COVID, because of ethanol, and it kind of seems like we have some obstacles moving forward. We're going to get to all that. Before we get to that, you're an ethanol trader. Tell us what that means. Tell us what you actually do and what you have done.
Yeah, sure. So, again, thanks for having me on. My
Yeah.
name's Jordan Fife. I've been trading ethanol for about 12 years now. I was previously with a company called Racetrack Petroleum about 10 years ago. They own and operate about 800 independent gasoline stations throughout the Southeast, all the way
Yeah,
up
we've got
to
Racetrack here.
Virginia. Yeah, absolutely. Yeah, Racetrack in Tennessee for sure. All the way down to Chattanooga. They're based out of Atlanta, Georgia. So I did gasoline trading for them. And then about 12, 13 years ago, the RFS started, which is the Renewable Fuel Standard that George W. Bush put into place to reduce our dependence on foreign oil. And since I had trading experience, my boss wanted me to get into it and figure out what was going on with ethanol. I was a younger Jim at the time, obviously. That's the way time works, 12 years ago. And I went to a conference for ethanol, and I fancied myself to be a gasoline trader. And ethanol was young, it was new, it was hip. And I really liked the people that were in the industry. And so I kind of moved into an ethanol role. And at that point, I had moved companies to a company called BioUrgia Trading. We are a physical ethanol trading shop. We have a lot of other things under our umbrella: grains, metals, gasoline, power, natural gas, some other commodities as well. But ethanol was our mothership, so to speak. That was the first commodity the owner of the company traded. And we got into that. And so we trade everything from rail cars, unit trains, barges. We've done exports, imports. We trade the New York Harbor, Chicago, West Coast, East Coast, and Gulf Coast, and then the Midwest as well. We probably are one of the top 3 or 4 physical ethanol trading shops in the country.
So you've actually been involved in ethanol like since the mandate. I mean, the whole way you've been involved in it. So this is nothing new to you.
Yeah, that's right. So there are some guys, obviously, ethanol get put into gasoline before the mandate. So there's a couple of those guys around still that like to remind me that I'm still new on the block, that were doing this stuff back in like the 70s with Jimmy Carter. But I was not. Yeah, but I have been doing it since the Renewable Fuel Standard Phase 1. Ever since then. Yeah, I helped at Racetrack actually convert stations into ethanol receiving stations to have 10%. So we had to change the filters. We had to work with cleaning up the tanks and everything like that, and actually dropping first loads of ethanol throughout the Southeast into Texas and everything like that. That was great.
Okay, I have our first chart I want to put on the screen here, and this is U.S. corn demand via ethanol. And what we see here basically is that we had, some pretty nice levels here: 16, 17, 18, 19, a little dip, and then 2020, of course, a very, very significant dip. I've talked extensively about COVID and how it reduced driving. What would be your best summary as an ethanol trader? What actually happened here?
So around March, when we were just figuring out what COVID was, we were just hearing it for the first times. The demand, and you're looking at it from a corn side, and that's obviously one of the ways to look at it, and it's going to compute to about the same you do it on the other side. I look at it from a gallon standpoint, and if you take a year ago today, for example, just today, we were doing as a country 9,400,000 barrels a day of gasoline demand. You fast forward to right now, and the last data available from last Wednesday from the EIA report, we were down to 7,600,000 barrels per day. So, I mean, you're talking a dramatic change. And the chart you're showing with that very scary, very bad dot there on the 2020, you got to remember, things have gotten better to get to 7 million. We were down at like 5 million. The lowest that the EIA, since they started tracking in the 90s had shown the lowest demand we've ever been as a country. So when the shutdown happened, like I was saying in March, when we just started finding out about COVID and everything, demand numbers hit lower than they've ever hit, and probably lower than they'll ever hit again. The country just ground to a halt. Everyone stayed at home, and subsequently, ethanol is 10% of the gasoline, roughly, give or take. So ethanol followed suit. When ethanol followed suit, that obviously is going to drive corn usage down. And we had, almost half the plants, if not more, in the country just completely shut that were not crushing corn into fuel. And we slowly rebounded, and we've gotten our way back up, and we're pushing up there. We're somewhere in the nines right now. I think the last report was 991, which was the highest it's been since March, which is good. But unfortunately, the demand is seasonally, not just COVID, seasonally is adjusting down. This is the time of year where we have the least amount of gas in demand. So kind of outpacing ourselves right now in terms of production of ethanol versus gasoline demand.
So that's kind of the scary thing here is that we're seeing, and I've got the chart on the screen here of weekly production. You see the big dip here on the left-hand side is about April is when we bottomed. And then this was that actually our best print like since March last week or second best?
Correct. No, I think
okay.
It is our best at 991.
Okay, so that's good in that, you're a farmer or you're me and you're looking at this and you're saying, okay, we're grinding more corn for ethanol. That's great, right? But then you look at the stocks chart and that kind of turns into like a little bit scarier looking deal because stocks are rising fairly rapidly here. So is this going to continue, this rise in stocks?
I do believe so. And again, for two reasons. And like I said, for the demand portion of it, seasonally we are adjusting down for demand like we always do. Mm-hmm. And then stocks, if you were to write a graph that would show like a seasonality over the last 5 years, stocks during this same period generally also build. But are we going to build at a quicker pace? Because the graph you're showing right there, that's almost a straight up line. Right. And it needs to start kind of flattening out. We need to have some pullbacks. But this is the time of the year, regardless of COVID or not, that we should start building stocks. And that kind of pushes us into spring maintenance. Around spring maintenance, there, people come out to drive more, and then the plants slow down or shut down for a couple of days to do their spring maintenance, and all that kind of aligns itself. And that's usually the last bad bite of the apple, if you will. And we start to then decrease stocks, increase demand. It's getting warmer. People are moving around about, and with, to relate it to COVID, obviously today was the first day of vaccines. Hopefully around spring, we've had, I'll throw a number out there. I'm not a doctor. Both my brothers, we were talking before, they both went to Vanderbilt. They can talk about the medical side, all this crap. I cannot. But they're administering vaccines. We should see demand pick back up, hopefully something close to what we were, that 9 million something barrels a day. And that would really support the ethanol industry as well.
So has the COVID deal, as somebody trading ethanol every day, this has been like the biggest deal in the world for you guys these last 8-9 months now. You got your day-to-day stuff, but in terms of the general direction of the ethanol market, demand, all that stuff, this COVID thing is the biggest thing out there, is it not?
Oh, without question. We saw flat price ethanol and crush margin get to levels of which, in the 13 years or so I've done this, I've never seen. And I don't believe you'll ever see it again. You had -30 board crush, you had 70-cent ethanol. Now at the same time you had 70-cent ethanol, you had negative crude. So it was a wild trading environment there for a little bit. But yeah, that first graph you showed where you went from 1036, 1046 production levels down to 500. You had giant corporations, shutting ethanol plants, your ADMs of the world, your Valeros of the world. These are massive corporations, but they had to shut. It's no fault of their own. They have basically endless money, and they were shutting these things down. So that means a lot of different things, but specifically there's small one-off ethanol plants that are 50 million gallons and stuff like that. Guys like that are way more adversely affected than these giant companies. But for the last, since March, it's every trade we do probably has a seasoning of COVID on it.
So I was trying to get the seasonal chart of ethanol production up, but in any case, so we know what's happened. We've lost a tremendous amount of corn demand. We're not using as much ethanol. When we look out into, say, the next couple of weeks and then the first quarter of 2021, what are ethanol operations looking at? I mean, are they looking at positive margins? Are they looking at negative margins? Is it terrible looking? Is it better looking?
It's unfortunately not great right now. We had trended in the right direction, and you're touching on it there. You know how this was the highest trend we've had since March. We were trending in the right direction. Stocks were not growing, and if they were, it was kind of negligible. We were at historically low numbers in stocks actually for quite a long time before this this ramp up here. Demand was coming back, but for all the reasons we just previously mentioned about demand is tapering off this winter, and because we're in a pandemic. The margin in Q1 and Q2 closing at the closing bill today, Q2 was approximately minus 15 cents on a board crush, and Q1 was about minus 19, minus 20. Those are historically bad numbers. If you took the last 9 months out of the equation, it would be about the worst we've ever seen on the forward curve. Now, that's the negative side, and it's pretty negative. But on the positive side, DDGs are contributing a lot to the margin. And depending on the corn basis in the area you're in, some of these ethanol plants, I speak to some that are reporting that they actually have a positive actual margin because of the DDGs they were able to lock in forward in the quarter and cheap corn basis that they're able to lock in. Now, you guys are trading corn a lot more than I am, but we know that cheap corn basis is kind of the exception, not the rule right now with the export situation we have with corn. So there's a pretty good bid in a lot of places for cash corn. So long story short there, unfortunately right now, the crush margin in Q1 for prompt Q1 and Q2 is almost as negative as I've ever seen it, minus the minus 30 and the grips of the pandemic in March and April.
Okay, so then to go back to some of these charts, like this weekly ethanol production chart where we just saw our best print since March, is this something that, in your opinion, ultimately starts going back in the wrong direction for us, meaning that we start seeing lower weekly output and that this is kind of a lagging deal here? Is that what we're dealing with?
Yeah, I would say quickly, yes. And the reason why is because, all markets are eventually going to react rationally, in my opinion. Demand's got to reach production, or production's got to reach demand. It just depends on which one you believe happens first. I do believe it's going to be a bumpy, kind of ugly Q1, just because demand is generally, like I said, very poor in that quarter, regardless of a pandemic. But coming out Q1, the vaccine's rolling out. People are all excited to get around and move and go see their family and loved ones. You could have a pop in demand there. It's spring. Maintenance is going to occur. Maintenance always occurs in these plants. So you're going to have a little bit of downtime on that. And then hopefully everything is back to as normal as it can be. And we start turning in the right direction. I do think we've probably seen the high on production for probably the next 3 months at that 991. I will say I was dead wrong about this last EIA report that came out, so take it with a grain of salt. But we track a nat gas model that shows how much nat gas each plant is pulling in. We ran it again. We run it every day, but we ran it this morning, and again we showed nat gas usage off about 5%, and that's across about 155 plants that we track. So we are showing the nat gas slowly regressing in our model. Then we put that into our S&D model. And then that, along with, I believe that 7.6 we were talking about, 7,600,000 barrels of demand is probably the low you're going to see. That was abnormally low. And I talked to people that have gasoline shorts. We have a gasoline, trading desk in our company. They are showing an increase in demand even from 7.6. So if you average it at about 8 to 8 million barrels per day of demand of gasoline, take 10% of that, and then you take about a 10% reduction in ethanol production across the board, you don't build it, as long as you're exporting more than, say, 60 to 70 a day in your S&D model. If you have all that in there, it's pretty simple math. we're not in a really bad place. So then the crush margin for everyone, the rising tide lifts all boats kind of thing. Crush margin for all the plants should improve if that happens. So 5 to 10% reduction in overall production for ethanol, and then an increase of like 2% in demand, and you actually look pretty balanced. So it sounds really scary, everything I said before. I just said that.
It does.
It's not an unattainable goal to drop 10%. It's just really not across the board. And it's been done. I mean, they cut it by 75%. We don't need to do that again. We just need a little bit of pullback in production with margins this negative. I think it's unavoidable.
So let's say we get to, summer 2021 is the best summer ever, and everyone's got a COVID vaccine, and we're back to normal. We're back to driving. What kind of lag time is there until ethanol production gets back on track along with like gasoline demand? Is it a week of lag time? Is it a month? Is it 2 months? Does it vary?
It depends on if you're asking like just if a plant is what's known as cold idled. And right now, a good example of that is ADM Columbus or ADM Cedar Rapids. And those are also massive plants. Now, they have a dry and a wet mill. But if you have a cold idled plant to take all the way down to all the way up, it depends on the engineers that are working on the plant. It depends on how much maintenance has been going on while the plant has been cold idled. There's also what's known as a hot idle, which is when they're running liquids to the pipes and everything like that. But if you're in cold idle, I've been told, not an engineer, but talked to a lot of them, it's very difficult to bring them back online in very cold weather. So Columbus, Nebraska, Cedar Rapids, Iowa, obviously, could be pretty cold at the end of Q1, right? I mean, still could be. But once you get into Q2, spring, you bring back on. They try to bring them back on and take them back down and bring them back on and take them back down because all the steam production and everything like that. And then they just try to get it at a constant state. It can take anywhere from a month to 2 months, but 2 months is really the exception, not the rule. If you've got good engineers that have been working on it the whole time, you could probably do it in just under a month to get everything back online and grind everything like that. That's if you don't have anything like really blow out, any kind of turbine or anything like that, or hammer mills or anything, any of the big equipment goes down, and then you got to order it and get it replaced, and that's just going to take more time.
So I guess kind of what I hear you saying, and if you had to project out the next 6 to 8 months, we may see some lower ethanol production here for 2, 3, 4 months, but there's some light at the end of the tunnel potentially.
Absolutely, I honestly believe that. I said the same to my friends in oil and gas here in Houston that were all depressed when it was $30 oil. I think the bottom's in. I honestly do. I think the bottom's got to be close on crush margin for ethanol. Because it's just not as bad as it was last time. We went to negative 30, and we had to cut a heck of a lot more than 10% of production, and we did as an industry. And ethanol deserves a great pat on the back. I know it seems like there's a lot of, I've read a lot of the stories, and there's a lot of bad press about ethanol plants pulling corn bids, but it could have been a lot worse if they would have kept grinding with no demand. And we saw it in oil. I mean, I don't think I would ever gone negative. I don't believe it's possible. There's too many levers to pull before they get to there. But you saw what happened when oil didn't slow down fast enough. It went negative. I mean, that's insane. It's crazy.
Yeah.
And ethanol really, they reacted quick. And if next time, or I'll send you the graphs, you can share them wherever you want. But if you look at how fast production on ethanol decreased versus how fast oil production at the wellhead and refinery production for gasoline, it was a stark difference. Ethanol really did a good job of getting their act together. And I think it saved a lot of money and a lot of people's jobs in the industry in the long run.
We have a new administration headed to the White House, the way that it looks. What do you see in regard to policy potentially as we move forward with a Biden administration versus Trump? Is there any major change coming? I know that they've delayed the volumes for next year, correct?
Yeah, they just released that today, that they haven't finalized them all. The only thing, I mean, if you kind of work backwards and forwards on what would be the biggest difference, and I've said this on Twitter a million times, I honestly don't mean to be political at all. I try to avoid the political Twitter sphere. It's a good
idea. It's good policy.
It's not for me. I'm more of a couple of Miller High Lifes and argue at a bar kind of guy about politics, but that's just
There
me.
you go. I'm with
But
you.
jokes aside, under the Obama administration, there were about 8 small refinery exemptions. And under Trump, that swelled. And I'm not trying to play favorites here at all. I'm just saying that's a fact. I think there were, it was like 80 something small refinery exemptions. And he got Carl Icahn involved and got through it. And the EPA was very non friendly to ethanol. And really, all that did, not all that did, is the main thing that those small refinery exemptions did was they drove RIN prices down. RIN prices right now are 69.5 cents, and RIN prices a year ago, before it was projected that Biden would be our president, were about 18 cents.
Hey Jordan, if somebody's listening and they don't know what RINs are, I'm sure there's at least one person. Explain in 30 seconds what RINs are.
When ethanol is distilled, every gallon gets what's called a renewable identification number. The reason for that is so that they can, oil refineries can prove that they have met the RFS, the renewable fuel standard. So they have to retire X amount of RINs versus their obligation. Their obligation is calculated by how much refining they've done and how much they've imported. And so these things are now traded. And the value of the RIN, once like I said, Trump had Icahn on. Icahn owns a refinery, and RIN prices had exploded coming into the Trump administration. So all of the oil guys were very upset about this, and they're trying to find a way around it. But they would have to undo the law of the RFS, which would take Congress, which would take the president and vice president. And we all know that there's a lot of states that like the RFS. Iowa, Nebraska, Indiana, the Dakotas, Minnesota. I could just keep on and on. All the ag states. So no one's going to undo the law. It just wouldn't be done. So they found a workaround. They called it the small refinery exemption, and they just handed them out to everybody. The RIN price plummeted. And like I mentioned earlier, I worked in retail before I worked at a trade shop. And I can promise you that if you're an independent retailer, the RIN price being over $1 absolutely affects at what cost you sell higher blends of ethanol, E15, E85. You can give some of that away, and you can outprice an oil major, which is, how often do you get to say you have a benefit on an oil major? It's rare, right? Mm-hmm. They had them, and the oil majors didn't like that. And so now the RIN price has gone back up because it looked like I'm going to be in there. And the reason why is the trade is looking at it and saying, okay, Obama did this, I will probably do it as well. It cut the small refineries, the RIN price will go up, and that will eventually drive higher blends of ethanol through E85 and E15, and people being able to discount it because of the RIN. I know it wasn't 15 cents. That's as fast as
it's not the most simplistic concept in the world.
It's not. I know it's not.
So, I mean, long story short, Joe Biden, good for ethanol or bad for ethanol?
I don't think he's any necessarily better or worse for ethanol. At the end of the day, he's probably about the same. He's probably going to be a little bit better on RINs, and that might be able to push you a couple percentage more in your blend than under Trump. But I don't think it's a huge landslide. Trump did give E15. Let's not forget that. That was a win for ethanol. And so I think at the end of the day, it's going to be a negligible difference, but maybe we get a little bit higher blends, and that's about it.
All right, I'm going to go out to the future now because you answered all my questions very quickly and efficiently. We talked before we started that Tesla or Elon just moved to Texas, and yep. Big buzz around electric vehicles, of course. It's been that way for a while. Yep. Do you see yourself working in ethanol in 20 years?
I sure hope so. I think I think ethanol, again, another pat on the back for ethanol. Ethanol, people are just learning about the byproducts of it that are beneficial. One of them is obviously hand sanitizer, stuff like that, right? I mean, this is not just fuel. We all, well, at least in my family, we enjoy a good stiff drink. Beverage grade has really picked us up in some times of woe. Sure. And then you're looking at the vaccine. We're talking about that. How do you make dry ice? Ethanol, like plants are helping. So, there's more than just fuel. But then to take it to what is the biggest component, what is the biggest byproduct of turning corn into booze, and it's fuel. That's a fact. And we're finding that if China doesn't want to import a lot, we're going to have probably a wall of how much we're going to be able to export. So at the end of the day, the projections I've read and looked at for 10 to 20 years is somewhere like 25% total saturation of the market. Look at California, for example. And I'm not picking on California. I enjoy going there, but it's got its deficiencies when it comes to light power. Right now, they're having like rolling brownouts and stuff like that. They can't keep the lights on, and they're giving away power for like a Tesla at a Whole Foods or something like that. That eventually changes. This is going to become commoditized in a way that people haven't really thought of ways to do. You're going to have to be able to pull over and fill up your Tesla and pay for it. And right now, they don't know how to do that. And like I said, in California, they're having brownouts. What happens if you can't charge your car because you don't have power? I just don't know. I have a hard time seeing how the infrastructure of gasoline and ethanol are surpassed by an aging and much needed updated power grid. It can't do it all right now. It just can't. There's just not enough. So at worst case, we could lose, in my opinion, 25% of the driving fleet in the next 20 years, and that's still terrifying. But then there would still be plenty of room for oil, gasoline, and ethanol in there. Again, there's pipelines, there's terminals, there's gas stations that have all built their entire infrastructure and logistics over this. If things get cheaper, internal combustion engines could be cheaper than a Tesla or something like that. So
that's a big thing, is the cost. I mean, that people don't realize. They're pushing these electric vehicles, but I mean, we've got a lot of oil, and we've got a lot of corn, and it's not running out anytime soon.
No. And again, the infrastructure is all there. It's built. You don't have to do anything different. It's there to service us right now. The amount of times you run out of gasoline is few and far between. I just think that it's going to be a competitive. It's not just going to be oil that's going to roll over and give it up, and corn and big ag's not either. Everybody's just got too much invested in it.
What do you think about, or do you have any opinion, or do you guys study like environmental type impacts? I mean, there's certainly a group of people in politics who would love to do away with all fossil fuels. We know that that probably doesn't happen, but is that something that you guys focus on?
No, I read about it like everybody else, but I wouldn't claim to be an expert in that field at all.
You're not trading ethanol based on the idea that fossil fuels are going to be written out of the law or whatever.
No. I'm might be an unpopular view, but I've always looked at as big oil as big ethanol's biggest customer. You have to sell to those guys, and you have to get along with them and everything like that. I mean, I live in Houston, and I worked in gasoline prior, but there is kind of a weird thought sometimes in some circles of ethanol that it's like us versus them, and I'm like, that's the biggest customer right there. I deal with every major in the country, and sell ethanol to them, and they don't really view ethanol in a negative light. It's more of like an additive, because I don't know if most people know, but gasoline that is refined in the country, almost all of it is sub-octane, and that means it's like 83.7 octane. You can't put it in your car and run it. If you put that in your car and run it, it will break down. You have to add an oxygenate boost, and ethanol is extremely high octane. And I used to use what's called MTBE. I used to do it for methyl tributyl ethylene. Maybe, don't quote me.
Close enough. It was good.
Yeah, why not? But now it's like poisoning groundwater and stuff, so it's illegal now. So again, like, you need ethanol for gasoline, and ethanol needs big oil. The two kind of go hand in hand, and when you add ethanol to 83.7, it boosts the octane, and now it's a sellable. It's a sellable thing, and it's a cheap octane. You can't get a cheaper octane in the world right now, even if they made it synthetically at a refinery.
That was very good. Jordan, do you have anything else to add? Because you answered every question I had in a very good way that was understandable, I think.
Well, no. I mean, I like I said, I really appreciate you having me. I always enjoy talking about the ethanol industry.
I can tell that you do.
No, I really, it's all I got right now, Joe. No, I'm just kidding. No, The industry welcomed me when I was young, and I've been able to do well, and not ahead of the desk of trading, and this is all I do all day is talk to brokers, traders, and just try to put together what makes sense in ethanol. So if anybody ever has any questions or anything like that, I'm on Twitter. You can follow me. Joe probably tweeted it out earlier.
I did.
I answer a bunch of questions. The DM's open, so if you ever have anything, like I said, this is all I do all day long anyway. So I'm happy to talk to anybody about it.
Jordan, thanks, buddy. I appreciate it.
Hey, Joe, have a great night, man.
I hope we don't have another ethanol disaster to talk about anytime soon. But if we do, you're going to be the man.
No, let's scratch that. Next time I'm in town to see my parents, I'll swing by. We'll grab a beer.
That sounds like a much better plan. Jordan, thank you very much. Everybody who's watching, thank you for tuning in. We'll catch you next time.